Hi, I'm your host, Ray Dogum, and welcome to VibeCast. VibeCast is Vibe Bio's weekly podcast where we explore some of the hottest topics in drug development, investment strategies, and technology innovation. Our guest today is none other than Jon Chee. Jon is the CEO and co-founder of Excedr, which provides equipment programs for scientists with cutting-edge instrument leases and comprehensive coverage plans. He spent his academic career in molecular toxicology wet labs at the University of California, Berkeley. Jon, how are you doing today?
Great. Thanks for having me on, Ray.
Yeah, I'm really excited for this conversation. And maybe we can get started with you sort of introducing yourself in a bit more detail, sort of like your journey into founding Excedr.
Yeah. So where do I start? So I guess if I kind of go back, kind of to the run up of founding Excedr. So growing up, I had always had a passion for, biology. And I guess that would also stem from early schooling. Maybe not so much in my upbringing. My mother was in finance and my father's a structural engineer. So I didn't really grow up around biology in the house, but I was fortunate enough to go through the Berkeley Unified School District. And had some really phenomenal teachers who taught biology and everything.
Did you
Surrounding
grow up
that.
in California?
Yep, grew up in California. So it's funny. Excedr is headquartered right now or has been in headquartered in San Francisco for a fairly long time now. But we were originally in Berkeley, and I was born in Berkeley, went through K through 8 in Berkeley, high school in Berkeley, UC Berkeley, and then started Excedr in Berkeley. And then around, I would say 2014, we moved super far away to San Francisco, which is maybe like 5 miles away. And that's we've been in San Francisco ever since. But growing up in Berkeley, being in close proximity to the university system, there was always an abundance of like great teachers, and so I think I got inspired by my AP biology teacher, Stephen Fong, Mr. Fong, and he really showed me kind of and really sparked my interest in biology, kind of early high school. And from there decided to pursue a more, I think probably, back then the track that I had in mind was, becoming a physician and getting an MD. And kind of after the first couple of years at Berkeley, kind of stumbled into a wet lab, and kind of wanted to test the waters and see kind of what it was
Test
like.
the pipetting skills?
Yes, exactly. And I joked that as like, thank you to my early PIs who were generous enough to let me into the lab as an undergrad, to handle the pipetting, because I think I was probably more of a liability than anything. But they took an early bet and really, kind of opened my eyes to wet lab research. And it was a world that I had never seen before or experienced before. And, basically that was the start, was kind of starting at undergrad and doing wet lab research for the rest of my time in academia. And how, the run up to Excedr was really born out of like the years of kind of like frustrations I had in the lab, particularly around, using and getting equipment that we needed. And the story goes is, and basically I still remember it was, so if anyone's, the listeners are familiar with the Berkeley campus, it's set up on a really steep hill. My lab was at the bottom of the hill, kind of closer to Shattuck, kind of downtown Berkeley, kind of where Berkeley BART is, the subway system. And the flow cytometer core facility is at the top of the hill. And we didn't have a flow cytometer in our lab.
Of course not.
Yeah, of course not. Of course not. And basically, I was tasked to run samples up and down that hill regularly. And I got very tired of that. Both, I was in decent shape back then. So I was like, I wasn't as gassed as I would be now. But after that, I asked my PI, I said, hey, like, can we get one of the flow cytometers into the lab? And he's like, do you know how expensive these things are? I had no idea at the time. And he said, well, let me blow your mind. $500,000. I was like, whoa, like this is an exorbitant price tag, especially from our lab. That would be pretty much half of our annual budget, just kind of going to one piece of equipment. And it dawned on me that this lab experience couldn't be in isolation to our lab. It must have been something that many labs might experience. And so from there, my co-founder also went to Berkeley, and he's a finance professional, and I'm the kind of the biochemistry kind of background, wet lab experience. We joined forces to figure out how can we alleviate this pain point, this financial pain point, when it comes to equipping labs with the equipment they need. And that conversation with my PI was also illuminating, because not only is it expensive to get it in the lab, once the thing is in your lab, you have to maintain it. And that's something that people forget, that it's like, if something's $500,000, it's kind of like having a Ferrari in your lab, and like just letting your Ferrari gather dust in the garage probably isn't the best for the machine, much like a flow cytometer. So, sometimes, and we had equipment that were basically collecting dust in our lab because we couldn't afford to fix it. The repairs and, can be very, very expensive and really slow to get up and running. So basically we started Excedr to solve those two pain points, like the financial pain point and the equipment maintenance and repairs pain point. And so, I like to joke that my co-founder is now like an honorary biochemist via just like osmosis, and I've kind of like via osmosis kind of gathered his finance expertise. And yeah, now founded Excedr in around 2011, and really our mission is to arm and equip every biotech startup out there with the equipment they need to do their best work. And we've been doing that ever since. Serving the early stage venture startup community.
That's pretty amazing. So 2011. So it's been 12 years or more maybe now that you've sort of been helping early stage, any stage, maybe biotech companies, probably early stage because the later stage ones are able to afford these machines or they find ways to get those resources. But the academic labs, like the one that you were working in, and many, many, many early stage biotech companies are literally surviving because they're able to do this, or to take advantage of this sort of program that you're offering. Makes sense, right? You were motivated personally by this problem. You figured out a way to solve it. Can you sort of explain maybe the actual operations behind Excedr?
Yeah.
How it works and how you're able to do this?
Yeah, totally. So we kind of do it differently. I'll just say we do it differently. Leasing, or, kind of leases, loans, kind of these kind of concepts are not, like leases are some of the oldest, businesses that there is. Like everyone rents an apartment. You have an apartment lease. At one point in time, you may, someone has signed an apartment lease. However, traditional financing is like a kind of one for the scientific community has been a black box. And we did it very differently. But for those out there to just kind of like level set, traditionally when you get a lease, it's from, a bank. And, you can think about your regional banks, your large banks, and they do it a specific way because as a bank, they manage, depositors' funds. You're saving like cash in a savings account. That's what they use to fund a lease. And with that comes a ton of extra baggage, rightfully so, right? Like if you are using someone's saving account to fund a lease or a loan, you need to make sure that is paid back in full, like on time, every month, right? And right. And of course, like with every credit product, the expectation is that you pay it back. But the banks, right, that's a flavor of leasing or loans, right? And with that comes a lot of, kind of hangups that might come with it. And some companies are suited for that, right? If you are Pfizer, you can probably manage a bank loan. Like, you have a whole team usually making sure that this is managed. But there's a lot of, banks will ask for traditional bank things. They're gonna ask for collateral. They may make you pledge your intellectual property. They're going to ask for a personal guarantee, aka the founder of the company. If you don't pay your lease, they're going to come after you personally. They're going to have covenants, right? They're going to tell you how to run your business. And that's all because it's in protection of the money in the savings account. Again, I want to I take off the business hat for a moment. If Jon Chee's money is in a savings account, I want to wake up the next day seeing that the money is still there, right? And I think,
I don't blame you.
Yeah, right. Everyone could, empathize with that. So that's like banking. And there's independent leasing companies that also exist. And independent leasing companies, typically, they do the fund model or asset management model, right? So basically, they don't use a depositor base, like they don't use savings accounts to fund their leases. They're going out there and talking to limited partners or investors and raising a fund. Much like a venture fund goes out and raises money from an LP, there are leasing companies out there that also do that. There's a, hey, endowment or sovereign wealth fund or high net worth individual or family office, pools of capital. They say, we would like to raise a fund and use your money to invest or to originate or create leases. So that's another model, right? And with that comes, the kind of the stipulations of using other people's money. The endowment or the pension wants to make sure that one, they get their money back, two, and they also get a return on their investment for giving you the money to manage. And typically, there's also there's like regulations around that, right? You have to be registered, and you're managing other people's money, so that becomes a whole nother thing. So that's independent leasing companies, and then the other kind of leasing folks out there are banks. So Excedr comes in very different, and probably very different because I came out of the lab, so I didn't know better. But it is baked into our DNA. So we founded Excedr with my life savings, literally everything I got into the company. That was the start in 2011. I bet 100% of everything I have into Excedr.
That's skin in the game right there. Okay.
Yeah, and we haven't raised outside capital since ever. So everything we do is coming from our company internally. So when we're looking at a deal, someone says, "Hey, we need that flow cytometer," we ourselves are funding it and managing it. So it's money
so
from.
Are you purchasing the equipment?
That's correct.
Straight up.
Yep, that's correct. So the money is literally coming from Excedr to create the lease for you, and throughout the life of the lease, we're also managing it. So this is getting into a little bit of inside baseball, but other leasing companies or a bank, sometimes what they do is they just originate. So they create the lease opportunity, they originate, and then after that, they sell it in a process called securitization, or they'll do an assignment of lease. So basically, they'll give it to someone else. So they create the opportunity and then sign the paperwork, and then they sell it to someone else for fees, and then someone else owns your lease, and then you're now working with someone else. So we don't do that either. So we fund the lease, we create the lease, we manage the lease, hold it all the way till the lease is completed. So you're only working with us. And that's what I mean by we're kind of weird, because this is a little like when I talk to folks in finance and they're like, huh? What? You do that? It's like, yeah, that's what we do. And enables us to work very closely with our clientele, because there's no handoff. Like, the money's coming from us. We're not handing it off to anyone else. It's like you are working directly with us for 5 years. So.
Yeah, I mean, I could see how that can give you Excedr a lot of control in how the machines are managed, calibrated even, and then just having that close relationship with the client, I think could really help to just increase your business as well. I can imagine.
Absolutely. And I think the one last thing that I think it's kind of like has always been to scratch our own itch. Really, it's like, what would we want as scientists from a leasing partner? And it's exactly that, right? Like, the person that brings you in, we want to continue working with that person, right? The kind of the what we have found as a frustrating experience as scientists ourselves is when there's constantly a handoff and you're just like, the person I was been working with is now no longer here. I lose all the context. They don't know who I am. I'm just a number. Whereas for us, it's like business is personal. So like when you're working with us, we're making a decision to partner with you for 5 years and work with you closely for 5 years. It's not just this transaction. Whereas, there's a handoff, someone else, playing hot potato. We're making a commitment. And I think, one, business is more fun that way. And two, it's it's much more pleasant. And also we're all in the same ship here and working together for shared, outcomes.
I know you mentioned the flow cytometer earlier in this conversation and how, you had to walk all the way up that hill every day. But I'm wondering, which types of equipment are you normally leasing out to these companies? Like, is there like a top 5 pieces of equipment that you typically would lease out?
Yeah. So I was actually talking to Alok about this when he was on the Biotech Startups podcast, and it depends on the lab, so the folks that and it depends on the lab, like the science that they're doing, and two, where they are in their kind of journey. For example, when a lab is very early days, they kind of need the most popular pieces of equipment for very early days are the kind of foundational pieces of equipment, right? So your freezers, your balances, centrifuges, the stuff
thermocyclers,
that
right?
Yeah, thermocyclers, the bare necessities. That's kind of the most popular. Then as you get kind of into you start raising your rounds of capital, your needs change. You start getting into the realm where folks want flow cytometers, liquid handlers, HPLC, mass specs. And again, those are, not every lab has all of those together. It's just if you're doing a lot of analytical chemistry, you're using kind of the HPLC mass spec stuff. And then, if you have if you're doing a lot of not analytical chemistry, you need cell sorting, obviously flow cytometry is where you're at. Next gen sequencing, and all of that. And then as you kind of so there's kind of this middle part of the era for the startup journey. And then as they get into kind of larger scale up, they're starting to get much more sophisticated pieces of equipment and multiple parallel lines. So a repetition of the same pieces of equipment, because when you get to when clinical trials are on the line, you want a backup because if you're in even with repair and preventive maintenance that we provide, there's still going to be some element of downtime, right? Because it's not instantaneous. You don't just snap your fingers and then it's fixed. So oftentimes we'll have clients who are kind of in this scale up clinical stage or just outright production mode where they have parallel lines to make sure if one goes down, don't even miss a beat. So that was a very circuitous answer, I realized, but it really, the question really boils down to what is the lab science and where are they at in their journey?
Got you. And another thing that I've seen companies do, especially early stage ones, is share some equipment with each other. So maybe they're in a lab space, an accelerator program or something, or some shared lab in Boston, and they'll share a flow cytometer. Are you seeing that those types of facilities are looking for your services as well?
Yeah, so we work closely with those folks as well. And I think this is a kind of a trend that we're seeing, and I'm super pumped up for it too, is that I always think about it much like how Alok, kind of describes this, inflection points. And this is not just a specific inflection point for a specific company. This is industry inflection points, right? There's a few kind of bottlenecks that are holding the rate of progress from really just going gangbusters. And I guess early days, the real estate was really hard to come by. If you were going to start a biotech company startup, you would have to probably sign a very massive lease, which is a very scary thing to do. You don't need that much square footage. You just need a bench. And to solve that pain point, all the incubators and real estate folks kind of gathered together and was like, okay, well, we will provide shared space, for that. And I think now we're in a moment where there's a little bit of momentum. You have your, incubators across the country, your J Labs, your Bio Labs, your MBC Bio Lab, you name it. And, across the board, they're all over the country. And with that, it kind of enabled a lot of, folks who are embarking on this startup journey to be like, okay, we can do this. We don't need to sign this massive lease. We can use a shared space. And because of that influx, now that the real estate has been built up and the real estate infrastructure has been built up, we are seeing a lot more needs. Like people are like, I think what we're seeing is that startups are dreaming and they're able to, and it doesn't just stay a dream. Like there is like, we can actually get this done without, putting ourselves in jeopardy financially. And which I think is great. It's kind of like the barrier to entry is dropping, right? It's like, instead of signing a, massive square foot, lab space and making that commitment, you now can do it a la carte, maybe 2 or 3 people.
Exactly.
Same with equipment, right? It's like, okay, we need $2 million of equipment. Maybe we can lease it instead. So it's kind of like the bar used to be like up here and is progressively, we're lowering the barrier to entry. So there's more ability for startup founders to dream big and really kind of get this flywheel going.
Yeah, and this is great for startup founders, but it's also great for investors who are trying to reduce the technical risk of these biotech companies at the lowest cost possible as well. So they don't want their portfolio companies to be purchasing really expensive lab equipment that they're only going to use for 6 months to a year because it turns out their primary experiment failed and that there's basically no good science there anymore. So having this ability makes a lot of sense.
Yeah, and I think exactly with like everything that VibeBio is doing too is like we're all trying to kind of facilitate the company formation and have the investors, because the biotech is always seen as this like it's scary for most investors, and by lowering the barrier to entry and de-risking is bringing in the capital formation element is happening, because that's an important part of a biotech startup. And everything that we can do to de-risk the initial go brings in more investors. And then from there, we can get more shots on goal for, game-breaking diagnostics, game-breaking therapeutics. And so I love to see that, because before none of this was possible. You're buying the flow cytometer and you're signing for the massive lease, and you just pray that it works out. But now it's like you can you can do the crawl, walk, run motion where you're like testing it out. Maybe you get some work done with a CRO, see if this has legs, proof of concept. And when you're ready to go, you then get the lease, the big release. You raise a bigger round, you extend your runway by not purchasing, and everything's done more efficiently. And it's more kind of like, there's more efficient means of running your biotech company versus before it was just like, it's like a prayer, like get a big check and a prayer.
It's all Hail Marys back in the day.
Yeah.
You mentioned the episode that you recorded with Alok. So this is a really good opportunity for me to just share again and let the people out there know that they should listen to that episode with you and Alok on your podcast, which I didn't mention in your intro, but it's an awesome podcast. And I've been listening to it recently. It's called Biotech Startup Podcast. So if you're out there, make sure you subscribe to that podcast and listen to Jon and his guests talk about their experiences. I think it's really, really amazing.
Yeah. And it was a blast having Alok on there. And I think really the impetus for starting the podcast was kind of, again, to scratch my own itch. Or maybe like it was like on like a former itch. Because I think when we were starting Excedr, like it was a different time. It was like startups weren't cool yet. Right. Like Uber was just getting started. Airbnb was just getting started. Zipcar was just getting started. It was hard to come by any sort of like startup education. Y Combinator was doing its best, and Mark Andreessen was also had the P Markup blog, and Fred Wilson from Union, but it was hard to come by. Like you would need to be in the forums, in the bowels of the Hacker News, trying to figure out how do I start a company. And I think, especially in the biotech, like software startups really got going quickly, and the startup kind of ethos and know-how kind of formulated way quicker. Whereas biotech startup education really, it's come a long way, but it is, years behind the other kind of startup literature out there. So the Biotech Startups podcast was really kind of, I was like, dang, I wish there was more education regarding how to, biotech life science company formation and what it takes to do that. And it's not only just the science, it's like, operations, finance, like all the things that you probably don't really know about until you get into it. That's critical to the success of your startup. And so really you kind of have this, the podcast as an opportunity and hopefully valuable to listeners, to really show them the ropes, and also to have folks, listeners, really honestly not feel as alone when they embark on this journey. Because sometimes I remember, thinking about whether we throw in the towel. And it was hard. And my co-founder said, let's do this. Let's keep going. And I'm very grateful for him doing that. But, everyone has different circumstances, but I'm hoping that listeners, when they hear people's journeys, that they feel that they can do this thing, like, and the struggles that they, our guests talk about, is something that is a shared struggle. And like, hey, look, they cracked it, they figured it out, and I can too. So it's part inspirational, part educational.
I love that. And I think, being a founder, although you're interacting with so many people, you have your employees, you have your investors, you have your board, and then everyone else you're interacting with, it could still feel like a lonely position sometimes, I think, because you're sort of, everyone's depending on you to sort of lead them, and you don't have as many people to go to. Of course, you can have mentors, and hopefully your investors are helpful and you'll have those conversations, but still at the end of the day, a lot of those decisions come down to, the executive team or the founder. So being able to hear the stories of really other founders is really helpful. Yeah, it's not that talked about.
Yeah, absolutely. Sure. It's not talked about really, because I think a lot of the time when you listen to it, there's like survivorship bias, and like it's the journey appears to be just like up and to the right. It was just like, boom, we made it. But whereas like it is actually a roller coaster, and a very emotional and personal one, to be quite honest. So yeah, that's exactly it.
Especially when you put in. Yeah, I was just going to say, especially when you put in all your personal assets or life savings into it. Very personal.
Yeah, absolutely. And, but even, for venture-backed companies too, right? Like, you take venture investment, the clock starts ticking, the stakes are very high, and the stakes are not only high for you, but everyone that you've employed. And also if you have a significant other, it's going to be a lot for them too. Like, it's not just, it's a lot of responsibility. And when all of that responsibility falls on the executive team or the co-founders, it can be debilitating. And it outright, like, just miserable. And I think it is incredibly important to kind of show everyone that this experience is a shared one, and you're not alone in it. Because I think I could have, gone through it a little bit more. I could have handled it a little bit better if I knew that, these stories were, I wasn't alone in that experience. So, yeah.
So you mentioned that Excedr never received investments from outside investors, but I'm just wondering, are you trying to raise money now for the company, or are you just depending on your revenue and partnerships to continue funding your operations?
Yeah, so that's a great question. And I think the way we've capitalized the company has really enabled us to do things differently, really, and enables us to move at our pace and allows us to move at the pace, honestly, of the customer's pace, because that's ultimately what's important. And we are not actively raising, like, in biotech, it's mostly everyone raises equity financing. So we're not raising traditional equity financing, but we are forging partnerships with large institutions, financial institutions, for folks that are, I mentioned it before, who are embarking on a kind of a scale up, right? To really be able to do above and beyond what is, within Excedr's existing capacity off balance sheet. But this is not in the form of equity. We're still doing the Excedr thing, but this allows us to basically, if someone needs a, multi-floor outfitting, we could do it in just as fast as we could do something that's, like I said, maybe a freezer. So we're trying to make sure that as folks' needs and scale up needs are starting to grow, that we can bring the Excedr level of quality, speed, and holisticness to a much, much larger scale. And so we're forging partnerships with financial institutions to be able to do that.
Interesting. Are you also forming partnerships with like large pharma, or I guess large maybe academic settings, or sort of other incubators? Mm-hmm.
So the partnerships, so this is not a capital partnership, but we work closely with kind of the academic institutions and the real estate, kind of solutions out there, in order to basically help kind of bring down the barrier to entry. And with academic institutions, we're helping them, now academic institutions are starting to be a little bit better on when it comes to tech transfer. So they do their just basic discovery, academic research, and then they think it's time to translate it, tech transfer, and start a venture. So we are, very much kind of present during that, to help, translate this science. And then and every step of the way, we are trying to be of assistance, from every kind of inflection point, whether it's shared bench, own space, floors to a building. We want to be able to be as supportive as we can with the kind of the players that live and breathe those various eras.
Totally got you there. That makes sense. Jon, this conversation has been really fascinating and interesting. I think, when we think about inflection points and how important that is for biotech companies to understand where they're at in terms of their own inflection points and navigating that in a way that benefits the growth of the company and benefits the science and also ultimately the patients. What are some of the typical value inflection points that you're seeing with biotech companies? And then we'll sort of wrap up unless you have anything else to add.
Yeah. So, and I'll say that I see it mostly from the infrastructure side. And it really boils down to when, I won't speak for every startup, but if you're coming out of academia, it's making sure that the technology that you are translating out is reproducible and you have a proof of concept for it. And I would even say maybe that's work that you do before you do the tech transfer. Because you do all the work, you can't reproduce the results. Why did you do the tech transfer? Save yourself the heartache of doing the work beforehand and then have the tech transfer conversation. Important inflection point there.
That's good advice.
Yeah, right. Like, do just make sure that what you're about to embark on has some legs. And once you do that, right, that makes the kind of the next inflection point of like raising kind of your first check far easier, like far easier, because it's de-risked, right? The investor's like, nice, the technology, you reproduced it, the data. This is good. Maybe we can go from here.
Oh yeah.
Right.
That adds a lot of value to the total enterprise of the company.
Oh yeah, like a lot. And I know Vibe helps, kind of helps with that, right? And I think that's critical. And there's obviously the equipment component to that, but de-risking it from the very get-go sets you up for success when you're going out to go fundraise, and also sets you lots of heartache. You don't have to like just get it done early. And then once the next kind of inflection point is as you get into your incubator and you start really building out a team. That's like a whole another thing where, it used to maybe be just you and your co-founder. The next up, it's not just you and your co-founder anymore. It is more than that. It starts, you're starting to make hiring decisions. And these are super, super critical, because at the end of the day, most of the problems that startups, ultimately call it quits on are people problems. And the like if you don't have the right culture, if people aren't aligned on your team, you start going in different directions and it can tear your company apart from the inside out. So being very cognizant about that, like obviously the science needs to be sound, like of course, but people kind of sleep on the importance of having a cohesive culture, because if you don't, your best people are just going to leave. You're going to have churn, and that can cause problems for a startup, clearly. So thinking about hiring, very, very like think long and hard about your hiring decisions. And then from there, if you've, science is sound, you started to build out a team and you're starting to generate real data, the next inflection point is kind of like you went from like, this is kind of, you've gone from 0 to 1, and you can start putting gas on the fire. And that's kind of like the next inflection point, hopefully. And if you're a therapeutics company on your way to, the clinic, hopefully, obviously there's a step in between, you need to do your animal studies and everything like that. But, you're from that point on, it's, you have a core team, the core science is you're feeling good about it. And then you can start putting your foot on the pedal and start gassing. But I realized that was a kind of very granular inflection points, but those are some key considerations. And, if I were to summarize, it's reproduce the data early before you start tech transferring. And after that, you start it makes it easier to raise capital. Once you raise that capital, use it efficiently, join something like an incubator, a shared space that keeps your costs low. Start doing your first kind of, I guess, set of studies, start making key hires with the importance of culture. And then from there, you've gone from 0 to 1 basically. And then it's time to really start generating data and getting into animal studies and hopefully the clinic. And then from there, obviously there's a lot more there, but I think those are some key ones that we see being in the early stage ecosystem.
I appreciate that. And you mentioned, culture being an important part of that. I totally agree. And I hope people out there, especially the academic researchers now thinking about becoming an entrepreneur or maybe starting their company this year or thinking about doing that, they'll take this advice and hopefully benefit from it. Jon, again, thank you just so much for being here and sharing a bit of your wisdom. It's so cool that Excedr has been around for 12 years now. We hope that it continues to help out these early stage biotech companies. And for those listening on YouTube or on Spotify, Google Podcasts, Apple Podcasts, please rate, comment, review, and share this, because we'd love to be able to get this to as many people as possible and help increase our reach. So with that, anything else you'd like to share with the audience, Jon?
No, appreciate you taking the time, Ray. And yeah, for, if after hopefully, what I kind of the circuitous journey I've kind of talked about, I'm always open. DMs are open. Find me on LinkedIn, and feel free to reach out, whether it's if you're interested in the Biotech Startups podcast or Excedr and you have equipment needs. Give us a shout. We don't bite.
Awesome. I appreciate that. And we'll make sure to include those links. Thanks.